Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts.
Just another example here. This is the U.S. dollar against the yen. Like I said, my favorite symbol, the yuck, the Y-U-K. You can see in this example, what we were looking at the time was on the right side of the chart. You can see I was calling it an oversold and then a retest mode. Well, what does that mean? Well, what you can see if we're looking at percent R is when it first goes oversold, like we said before, it's happening a little bit before we get our confirmation on our acceleration bands. Just trying to draw that in right here. So there's our first setup on the percent R. It's the first day you close under the acceleration bands. In this case, actually, they both confirm on the same bar on that gap down the next bar. And some people would say, oh, see, you're also breaking prior support. That's fine, but bottom line is that this is a unique thing. Sometimes it breaks even before the support breaks. Sometimes it breaks in conjunction with the break of that technical support. But what you notice is, look at those retest points along the way as it bounces back above that 20 threshold. This is where a lot of traders get faked out. Looks like it's starting to come back up. We've had a little move up, but that is actually just a reset point for my stop. If it closes above that bar's high, then I get out. We get another one of those points on another candle up right into the acceleration band's resistance. That's just another closing stop. If it closes above there, I got to get out. You can see on this last one, it had another one of those, and actually you can see this very last bar here, this retest was violated, and it closed above there. So you've got to exit. That's an exit based on this particular methodology because it's saying that strong trend is ending. And you can see that, like in the last example where we had that same kind of a breakdown, that same kind of a retest happening, very nice re-entry points. I think it's important to have re-entries within a trend, and so you can see the next time that it comes back above there, we do violate the next bar, and you've got to get out on that point right there when you violate that prior closing stop high. And then, of course, that one's breaking back in late November, back just above the red lower acceleration band as well. And look at what happens. It starts to work its way higher. Do they always work their way higher? No. You can see that sometimes you'll see situations where it'll just kind of stabilize and just kind of flatline in a range, where it'll just be stuck in some kind of a range. I don't want to trade the ranges. Some people like to trade ranges. I like to trade trends. I just find that, where are the best moves on this chart? If you go look at, where can I make the best money? Well, you can see some of the sweetest spots on this chart, where it's really accelerating. You get that real break point there where it really almost looks like a waterfall kind of a move. Got a brief one there, but got faked out as it break back in. On this chart from the upside move ending in late December. But bottom line is, those moves, and we had a brief little one on the downside there as well at the beginning of mid-January, that's what we're looking for, those stronger trends. When you go through these periods where you're getting what we call a range contraction, range contraction looks like Bollinger Bands squeezing together. You've heard about the squeeze probably with Bollingers in blue here. I've kind of drawn them in February where you're squeezing. People say, it means you're getting ready for a big move. And I'm like, yeah, but which direction? And so that's what I'll wait until I get the catalyst, the real official break point. And then, we may leave a little bit on the table, but we want that confirmation just to know that we're going to be able to trade a trend with a lot more confidence. So that's really the secret for me, is being able to trade with confidence. And also, how do you stay with your big winners? Most people are so conditioned to take a quick profit for fear that they're going to give back that profit that they never give themselves a chance to ride for a bigger move. So what I advocate is that I want to, in options trading in particular, take half of my position profits when I hit 100% or more. Now, you're not always going to be able to get that, but there are times where you might even get a 50% profit, and maybe you take off 2/3 of your position to get your initial risk capital back if you're not comfortable with the trade anymore. When you're in a winning trade, I can't say this strongly enough that that's where typically when you're right fairly quickly, and that's where you're typically going to be right much longer than you're expected. Versus, too many people, because they've seen some profits slip away in the past, get gun shy. We're all human, and we all have this fear of giving up profits. It's one of the fundamental 4 fears that we talk about at big trends. There's several others, but this is one of them. And the bottom line is that, from this perspective, we want to say, how do we release that fear? How do we give that fear up? Well, if you get your initial risk capital back after making a nice score on a trade, and you still have some contracts left, still have some action, if it keeps on going, you basically, you may hear the term playing with the house's money or the free trade idea. But the whole idea is that you're going to be able to follow that, the rest of that move a lot more systematically and less emotionally because you've recouped your initial risk capital, your initial investment. And so, and the guarantee of at least a break-even means that, okay, if you get a double on half, if the other half were to wipe out, which you don't want to let happen, you would still be looking at basically a break-even before commission. So the idea here is that if we ride the other half position, what do? Well, we'll typically follow the indicators on through, or if it gives back half of its gains from its peak gain, that's typically a sign that it's giving back too much. So say it went up to a 150% gain, then it heads back to just a 75% gain. That would tell me, okay, I got to go, got to get out there. Or if you can have enough contracts, you can exit half again if it doubles once more in a really strong big trend. So, if we go up, buy an option for $1, you sell half of it at $2, and you've got, you got to start with at least 4 contracts. You sell 2 of them at $2. You've got 2 left. It goes from 2 to 4. You sell one of your remaining 2 at 4. You've gone from 1 to 4 now on one of those 4 contracts. That's a nice 300% pop on one of the 4. You've got a double on the other 2, and now you're riding the rest, trying to let that big trend keep running. Frankly, if you talk to any hedge fund manager, any kind of player that's looking for absolute returns, they're going to tell you it's those rare big trends where they make the bulk of their profits, and so they're seeking those. And they want to be a part of those. If you have to scratch out some other trades, and then when you catch those big trends, you don't want to look back and say, "Oh my gosh, what did I do? I sold it too soon." Everybody can always play the hindsight game to some degree, but the basic principle is that it's those big winners that are going to carry your portfolio, especially in options buying. So.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.